Welcome to Tenor Tech, where I solve the problems you didn't even know you had.
You start by confirming eligibility and collecting documents now. Don't delay. Get recent pay stubs, last 2 years of tax returns, your mortgage statement, and photo ID. Check your credit score and calculate loan-to-value so you know how much you can borrow. Once done, contact lenders for initial quotes and pre-qualification. Make sure to note interest ranges and fees. This prepares you for precise loan comparisons and speeds up the application when you submit. You fill out the lender's application online or in person and attach the documents you gathered. Be precise. Include property details, requested amount, and recent income proofs, and authorize the credit pull. Next, arrange appraisal scheduling or upload a recent appraisal if allowed. Appraisals verify value and affect your rate. Once submitted, respond promptly to underwriter requests and correct any missing items. Faster responses reduce processing time and improve approval odds. You review the closing disclosure carefully, check rates, APRA, fees, and final payment schedule, then sign closing documents and fund the loan. Arrange payoff of the original mortgage if applicable. Once closed, monitor the new loan account for accurate billing. If you hit a snag, request the denial reason immediately, correct documentation errors, and consider disputing credit report mistakes or shopping other lenders. Keep copies of all correspondence and deadlines.
Thanks for watching. Subscribe to keep your life in tune.